Welcome back. It's time now to take a look at the top business stories. Ministry of Foreign Trade releases study on commercial and investment ties with 10 Muslim countries. MOU signed between Abu Dhabi Chamber of Commerce and Khalifa Industrial Zone Abu Dhabi. And US President says clean energy is the way forward for the US. UAE markets edged lower today, breaking a recent rally as the release of first quarter earnings are expected to be the main driver for the markets this week. So let's look at the equity markets for today. The DFM General Index fell by 1% to close the session at 1,665 points. The best performing stock was Al Salam Sudan, rising 2.35%. The property sector posted losses as MR Properties fell 1.43% and Arab Tech dropped by 1.31%. Bahrain's Al Salam Bank gained today by 1.35%, while Dubai Islamic Bank fell 1.32%. DU rose 1.23%. 131 million shares were traded, valued at 192 million dirhams. And over in the capital, the ADX gained by 1.28% to close at 2,712 points. In the property sector, Aldar Properties lost 1.79%, while Sura Real Estate fell 1.95%. Commercial Bank International was the best performer of the day, with a rise of 9.68%, followed by Al Khain Cement Industries with a gain of 8.82%. In the banking sector, RAK Bank fell 4.22%. The National Bank of Fujairah gained 8.24%, while Abu Dhabi Commercial Bank gained 0.37%. Dana Gas fell 1.41%. 113 million shares were traded, valued at 170 million dirhams. And let's now take a look at the GCC markets, which ended mostly lower today. And now to our top stories. The Ministry of Foreign Trade has announced that it achieved an excess of $9.5 billion in its trade with Muslim countries in 2010. According to the Emirates news agency, a report released by the ministry on commercial and investment ties with 10 Muslim countries shows that non-oil trade increased by nearly 12% between both sides, from nearly $50 billion in 2009 to nearly $56 billion last year. The 10 Muslim countries include Iran, Iraq, Saudi Arabia, Malaysia, Pakistan, Turkey, Bahrain, Qatar, Oman and Afghanistan. Data from the study also shows that the rise in trade is a result from an increase of re-exports from the UAE to the Muslim countries by over 11%. Overall imports rose by 16.8%. Iran stood at the top of the list of non-oil trading countries with the UAE, with an overall value of $10.4 billion in 2010, totaling over 18% of non-oil trade out of the 10 countries. A memorandum of understanding was signed between the Abu Dhabi Chamber of Commerce and Industry and the Khalifa Industrial Zone Abu Dhabi on Saturday. The signing aims to enhance both parties' efforts in laying down a base for sustainable growth. It looks to encourage the capital's economic expansion by developing major projects in cooperation with the private sector, as well as the setup of economic clusters and free zones. The agreement was signed by the Chamber by His Excellency Hilal Al-Meheri, the ADCCI Deputy General. The Chamber will endorse all free zone industrial, trade and services industries issued by KIZAD in accordance with the licensing regulations in Abu Dhabi. His Excellency stated that the ADCCI will work with both the Abu Dhabi Ports Company and KIZAD in attracting further foreign investments. Leaders from Economic Zones World gathered at the India Club in Dubai to explore the expansion of investment and trade opportunities between the Jebel Ali Free Zone and India. The meeting discussed ways to open up avenues of cooperation and investments into key areas. India is Dubai's largest trading partner, and according to statistics, non-oil trade between the two in 2010 reached 183 billion dirhams. Economic Zones World is home to 693 Indian companies, with 679 companies based in Jafza, while the rest are in Dukams and Textile City. Economic Zones World Chairman Hisham Al-Sharawi stated that the Indian business community has played a vital part of national building for decades. The biggest share of the Middle East telecommunications market will be controlled by up to 4 groups over the next 4 years, according to a chief executive of Saudi telecom company International. This comes after a number of acquisitions and new market entries over the years. According to a local paper, the telecoms head stated that the largest companies in the Middle East are expected to control more than 60% of the region's subscriber base. He added that further consolidation is expected, as well as the disappearance of single market operators, a trend that is currently being seen in Europe due to difficulties in cost management. He also stated that the withdrawal of private equity companies is also expected. Other analysts have forecast that Abu Dhabi's Etisalat, Kuwaiti firm Zain, Saudi Telecoms Co and Qatar's QTEL are likely to increase their market share to 75%. And in our fast financial news, Abu Dhabi National Oil Company has announced a 5% reduction in shipments of crude oil for June of this year. This will include Murban, Lower Zakum, Sheikh and Upper Zakum exports. The decision comes in line with OPEC's decision for member state levels of production. The UAE has signed a memorandum of understanding and an air services agreement with the government of Vietnam. The two parties have agreed that any number of designated airlines for both parties will have the right to perform scheduled air services. The UAE delegation designated Emirates Airline, Etihad Airways, Air Arabia, RAK Airways and Fly Dubai, while Vietnam Airline will be Vietnam's designated airline. Dubai's Al Khalij sugar refinery restarted its operation on Saturday. The refinery is one of the largest in the world and is expected to produce around 6,000 metric tons of sugar per day. Al Khalij shut down its operations on April the 8th of this year due to slow demand. And after the break, we will run you through what's making the headlines in international business today.